who shopped the poll around, but it seems likely is what political consultants and various politicos have told us.
Did you get a wink when you talked to people about this? This is not good news, or he's heartened by what he learned?
He thinks that he could run well with the people who currently support Eric Adams, which is really interesting, and is part of the reason why Cuomo, according to people who have talked to him or who are familiar with his thinking, probably wouldn't run unless Adams were to leave the office for whatever reason. He wouldn't run against Adams, but Cuomo seems to have continued viability with the base of voters who support Eric Adams no matter what.
Did you talk to Curtis Sliwa for this piece?
No, I didn't. This is all about Democrats.
Of course, but they're going to have to deal with him at some point, right?
Of course, and his cats.
If you want to do this, and the feral cats. Hey, there's plenty of time if you want to talk to the beret, I'm sure. How long do they have to decide?
Well, so technically there's like 18 months until the primary election, but people familiar with campaign cycles here in New York will remember that these things get locked up pretty early. People start fundraising very early. Adams has already raised $2.5 million for the re-election, which is a formidable amount, and that's not even counting the money he'll get from public matching funds that's going to go to that. So if someone really wants to do this and challenge him, and they expect to challenge him and he stays in the race, they're going to have to decide relatively soon in order to be able to meet that fundraising advantage that Adams has.
Pretty wild stuff. Nearly a dozen Democratic candidates considering, not yet running, but considering challenges to New York City Mayor Eric Adams. Laura Namias, easy for me to say. Great work, and thanks for joining today on Sound On. We really appreciate what you're doing here, and this could be something to watch. So we heard it today, okay, the 30th of November. Think back to this conversation when one of these makes it official. I'm Joe Matthew at World Headquarters in New York. We came here just for this story. Some final thoughts straight ahead on Sound On. And we'll have a little bit more as well with world and national news. Keep you up to date with us here on the radio, on the satellite. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are just minutes away from Tesla's big event, 3 p.m. Wall Street time. CEO Elon Musk will be delivering the first vehicles at Tesla's Austin headquarters as part of a live streamed launch. Dan Ives is a senior analyst at Wedbush Securities, and he was a guest earlier today on Bloomberg Markets.
Look, the important thing today is about pricing, because that's really the unknown. We think pricing is probably sweet spot 60 to 70K, and that's important. You'll also get tax credit there. At that level, at scale, 2 to 250,000 per year as we get into 2025 in terms of unit.
Ford has restored its financial guidance for the year. It says it'll be up to $1.5 billion lower than it was before the UAW strike in October. The automaker also has higher labor costs that will add about $900 to the cost of each car. That compares to a $575 number that GM announced yesterday. We asked Ford's chief financial officer, John Lawler, about that discrepancy.
I'm not exactly sure why their number is that much lower than ours. That's something that we'd have to unpack with them. We know what we've done with this contract. We know what the start point is. It's 60 to 70 basis points on our income statement basis. And now what we need to do is we need to work on driving productivity and efficiencies and reducing the labor hours, the hours it takes to build a vehicle, and reducing that cost. And that's what we're going to be focused on going forward.
And Ford shares now trading lower by 3.3%. Those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We keep you up to date on world and national news here on the fastest show in politics, and do it right now with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. It is the 7th day of a temporary pause in the Israel-Hamas war. Negotiators from both sides reached agreement at the last minute to extend the truce for another day, and it's unclear if this extension will continue. We do know that Israeli Prime Minister Benjamin Netanyahu plans to resume attacking Hamas the minute the pause is over. Former Defense Secretary William Cohen tells Bloomberg Sound On the U.S. is trying to warn Israel about its tactics.
You have the President Biden and Antony Blinken sending the signal behind the doors, so to speak, through emissaries, perhaps even our CIA chief, to say, be careful here, because you have an existential interest at risk here, but we have interests at risk in the greater region. We do not want to see this go further.
William Cohen says any escalation could put U.S. forces in harm's way. After a nearly 10-month blockade on military nominations, Alabama Senator Tommy Tuberville has indicated he does plan to move forward with pending nominations as soon as next week, though Tuberville did not elaborate on what he plans to do to allow nominees to move forward. He did, though, acknowledge it's time for the chamber to get it done.
We need to get them promoted. I don't know what they're going to do with the resolution, but we're going through all the people that are up for promotion. We will promote people in the very near future.
Senator Tuberville says his actions did stir up Democrats and caught their attention. Donald Trump and his attorneys are once again prohibited from making public statements about the courtroom staff in the former president's civil fraud trial. A New York appeals court reinstated a gag order today that had been temporarily lifted 2 weeks ago. The gag order was originally issued in October after Trump lashed out at the judge's law clerk. The judge now says he'll vigorously enforce the gag order. Trump's attorney says it is a tragic day for the rule of law. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Joe.
Hey, Nancy, we thank you. The Senate Republican luncheon today behind closed doors. You know, they do this. It's important for colleagues to get together and talk about the issues. It was hosted by Chuck Grassley of Iowa. And as usual, it was supposed to be a fun working lunch, if not a fun social affair. Complete today with pork chops, provided by the Iowa Cattlemen's Association. Chuck Grassley even tweeted a picture of himself with a plate of pork chops, alongside his fellow Iowa Senator Joni Ernst. But it did not go as planned, the luncheon. Joni Ernst sat down, tucked into her plate of Iowa pork chops, and she started choking. It was for real. She's struggling. And thankfully, there was a doctor in the house. We're just learning about this story today. a doctor by the name of Rand Paul, one of the least liked members of the Senate. From Kentucky, he raced to Joni Ernst's table and used the Heimlich maneuver on her, successfully saving her life today inside the closed Senate luncheon. Joni Ernst was saved. And of course, what did she do immediately after? She went on Twitter and wrote, "Can't help but choke on the woke policies Dems are forcing down our throats. Thanks, Dr. Rand Paul." Few seem to dislike Rand Paul more than Senator Lindsey Graham. Who was asked about this by the Washington Post. He said, "God bless Rand Paul. I never thought I would say that." So with apologies to Joni Ernst, we move on here. And I'll meet you a little bit later on Balance of Power on Bloomberg TV as we pick up the conversation that we've been having through the program here today. The truce appears to be at a breaking point here in Israel and may be over by the end of the day. We've also got a funding battle to talk about on Capitol Hill. We'll be joined by Sarah Chamberlain with the Republican Main Street Partnership and a lot more where that came from. Anne Marie will be back today, too. We'll meet you there. Here in New York, it's another matter, of course. It's time to hand the baton. I'll meet you back there a little bit later. Carol is in the chair, as is Jess. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a happy Thursday, everybody. Very good afternoon. Live from our Bloomberg Interactive Broker Studio. We're streaming on YouTube and, of course, on Bloomberg Originals. We are getting ready to wrap up the month of November. Carol Masser, Tim Stenivek is off today. And with us is Bloomberg's Jess Metton. And I feel like November, last few days, maybe going out with a little bit of a meh. Although the month, it's been a very strong month, though, for U.S. stocks.
This has been a stellar month, Carol. So the S&P 500 up over 8% for the month heading into the closing bell. So this would be its second best November since 1980.
All right, so that's a superlative worth noting. All right, and despite economic data that provides more support of the idea of a Fed done raising interest rates, it's interesting that we're not seeing a little bit more of a rally, although we are off our lows of the day. More to come on that. We're also going to talk about Elon's long-awaited Cybertruck. Katie Greifeld is really obsessed with that. We're going to talk with our TV colleagues in just a moment. And it's also been rough seas for boat sales. I love looking at different things that are going on in our economy just that kind of say it's a reset post-pandemic.
It definitely is, and it's interesting, especially after a month like this, following 3 consecutive months of losses. When we think back to August, September, and October, what things could shape out heading in December into year end.
All right, so we're going to be all over the markets. Also ahead, we're all over many of the most read stories on the Bloomberg on this Thursday, including the biggest boom in bonds since 1980s, setting off a boom in just about everything else in the market. We've seen investors moving into a lot of different asset classes. We'll get to that. We've got another most read about the banking escapees that are now busy cutting off their former Wall Street comrades from one of their favorite historic money spinners, corporate loans. And then one more most read, the passing of Henry Kissinger. This news, of course, the world getting late last night. And the part of his legacy that just might not make headlines this week. This is an interesting column that's been written by one of our colleagues.
It's going to be really fascinating. I loved reading that one. And then plus another key thing we're going to discuss, Sam Altman, right? Back at the company he co-founded, winning the recent 4-day war on OpenAI. But now comes the hard part, Carol, winning the peace. So we'll explain more on that later.
Yeah, it ain't over yet. We've been saying TBD, TBD, TBD. COP28, by the way, underway in Dubai. We're going to talk with the VP of Global Public Policy and Economic Graph at LinkedIn. We're going to talk with Sue Duke, who is going to tell us about green hiring, green skills, and there is, folks, a green ceiling out there.
Yes, the green ceiling.
Women can't get a break, I'm just going to say.
We can't.
And then our own Bloomberg Intelligence team, also a member of that BI team, headed over to Dubai shortly, but she's going to join us in studio and what she's watching out for, especially when it means to things like concrete and the steel industries. Right now, though, it's all about the markets. Over to our TV colleagues. Countdown to the close starts now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Scarlett Fu and Katie Greifeld here. Romaine Bossack has a day off. We are joined now by our colleagues Carol Masser and Jess Menton. And of course, we welcome in full our Bloomberg audiences across television, radio, YouTube, and originals. Good to see you, Carol. What are you guys keeping your eyes on? I mean, certainly not the market because it feels pretty meh in terms of price action.
Right. It's kind of a real thing, this meh thing. Although it's been a great month for stocks as we wrap up. But I agree. And I feel like as economic data continues to come out, and we hear from Fed speakers, I like all these different stories that kind of remind us that we are getting back to our post-pandemic world. And I look at something near and dear to me, boating, but boat sales. I actually bought a boat during the pandemic, looking to kind of get out and feel like, how could you do it like in a safe way? Boat sales soared during the pandemic. Well, now we're talking at numbers now maybe estimated to reach a decade low. So again, it's another victim of higher interest rates. If you're trying to finance something like that, it's going to cost you a lot more to do. And so we are seeing certainly a pullback, kind of a reset post-pandemic, Jess.
I always enjoy, Carol, when you do share those boat pictures on Twitter, X rather, I should call it.
I don't know what you
But I always love it. But especially when you're thinking about inflation, some of those higher rates weighing on those discretionary purchases. But it is interesting to see kind of where we've come and gone, obviously, since the peak of the pandemic and where we are now.
And of course, we talk about boats, we talk about ways of getting around. Katie,
planes, trains, and automobiles.
Yeah, you've been obsessed with Cybertruck, or at least talking about the long-anticipated.
She's obsessed.
Yes, debut of the Cybertruck.
Let's get some pictures up for our TV audience of that Cybertruck because, as I said to Scarlett earlier, it's Cyber Thursday. It is the long-awaited release of this Cybertruck. It's 2 years behind schedule, of course.
Keeping track.
I mean, take a look at it. It's huge. It's difficult to make. It's finally coming to the market. We are expected to hear from the company details when it comes to its price, its configurations, and its battery range today. Of course, this is part of an event at Tesla's Austin headquarters, a live stream launch event starting at 2 p.m. local time. So should be starting pretty soon. I am really interested to see how this is actually received, how many they actually produce, and how many they actually sell.
You guys realize that you can customize it, right? It's stainless steel, so you can get these wraps and apply it to the car's exterior, and you can get
neon.
Camouflage, neon, whatever
Camouflage, that's pretty cool.
Yeah, $50,000 starting price. Somehow I think, you throw in a few extras, it's going to go way above that. But we will see. But what's interesting is you're going to have to be patient, right? Because in terms of ramping up production, folks, it's going to take a while. Elon Musk saying just last month they could ramp up to a rate of 250,000 vehicles a year by sometime in 2025.
That's not very many.
No. And we know how Elon is when it comes to projections. They kind of move around a little bit.
It's a concept.
It's a concept.
Just want to point out that event is in Austin, Texas, my homeland there.
There you go.
But obviously, that Cybertruck being delayed behind about 2 years there. So interesting to see how all of this shapes up moving forward.
And it's a far cry from what's going on with Tesla vehicle sales overall, which has
Mm-hmm.
really dropped off. And Tesla has had to cut prices for those vehicles. And the repercussions for the other automakers are that everyone is cutting prices and sales have really, really slowed down.
Just to focus on the truck a little bit more. So it's a pickup truck.
Hashtag obsessed.
It's a pickup truck. There is a bed there somewhere. There it is again. It looks awesome.
What is it that you like so much about this puppy?
I feel like if it looks like if a teenage boy drew a picture of a truck and then that drawing became a real life truck, that's what it would be.
It looks like it comes from Minecraft.
Yeah, it's like very dystopian. If it was the end of the world, I would want to be driving that truck.
It's kind of like, what was the vehicle in Back to the Future?
Yes, I'm getting those
the
Back to the Future
DeLorean
vibes.
on steroids, right? Or with even less angles, if you will, or
It
more
doesn't
angles.
run on the flux capacitor, though.
It doesn't run. How do you know that? How do you know that?
Got to fact check.
It's an electric vehicle.
All right, guys, we're going to be watching for some headlines when they finally roll out. I'm curious who gets those first cars, right? It must be some of those Tesla devotees. Anyway, we'll certainly bring you any headlines that come on Tesla. And we will be back in less than an hour. We're going to wrap up, who knew, the month of November, just kind of flying by. Beyond the Bell, join us at 4 p.m. Wall Street time. that we are seeing the biggest boom that we've seen in decades. This month has been very different for the U.S. Treasury trade, but it's also mean like everybody's kind of all in on everything. So let's get to it. Back with us, the killer duo that wrote this story, Bloomberg News rates reporter Michael McKenzie. He is joining us, as well as Liz McCormick, Bloomberg News chief correspondent for global macro markets. Liz is on Zoom in New Jersey.
Dynamic duo.
They are the dynamic duo. Michael, I want to start with you. You two are really the bells of the bond ball right now, because I feel like it is like your world in a big way as we watch the very different trade that we've seen in November. This has not been, though, an easy year, Michael, for the U.S. bond market, and yet here we are in November. How remarkable has this trade really been?
It's certainly been remarkable, and it's really something that a lot of the active bond managers have been hoping for. They've been trying to position for it pretty much since you can go back to last July of last year when they had the first kind of Fed pivot. They thought inflation was transitory, and therefore they started putting bets on that the Fed would stop in the middle of 2022, except the Fed didn't stop. Inflation wasn't transitory. And I mean, I was talking to one of the investors who over at Western Asset who's had a terrible time, but for November, their fund has jumped 6.5%. So he was saying, you know, we got the call wrong, but things are looking better now. And there's a lot of relief from those guys.
Liz, I want to bring you into this conversation. Let's broaden this out. So not just U.S. Treasuries, but other parts of fixed income also this month having a pretty strong month here. Talk to us more about that.
Yeah, so the index in the story that Mike, who I feel like is my fourth brother, I have three. And
Is he on speed dial? All that good stuff?
Exactly. But is the U.S. Ag, which is treasuries, corporates, and all that other good stuff, a bunch of bond types in there. And that, like we show in the story, you know, was having the best month since the 80s. And it's just amazing. I was saying earlier to someone that, like, look at that IN page on Bloomberg, which Mike and I used to always look at it. It was like red everywhere. That's all the bond indices. Now it's all green. I can't believe it. You know, I mean, like from month to date, year to date, you know, and like Mike said, some of these investors, which I guess you got to give them credit, they stay the course, they take the pain. For a while been saying, oh, it's a good time for bonds. And they haven't, you know, got any, let's say, success on that, and now they have. I mean, this month is just, I mean, and Mike and I keep saying it's not going to be a straight line like this. It's not going to be 60 basis points a month, but it's definitely kind of lifted all boats, as you said.
I'm pulling up the page. Canadian aggregate, China aggregate, credit, corporate, global inflation link, global high yield, pan-European high yield, treasuries. I mean, it is all green, all green. But, you know, Michael, Liz gets to a good point. Is this it? You know, it's been a very volatile market, to say the least. So, and I do wonder, does this trend continue? And what's necessary for it to continue? And does it necessarily translate into other parts of the fixed income world?
That's really a great question. It's really what's got everyone thinking in the fixed income market, because clearly you've got treasuries, which is the sort of your classic defensive haven rallying strongly. But junk bonds had a great month of November too. So there's a disconnect. I think at the moment the market's looking at soft landing, because we're nowhere near the lows in treasury yield that we saw back in March when regional banks failed and the bond market was definitely thinking recession's coming. So now the debate, it has shifted from the Fed higher for longer and maybe having to raise rates again. We now have kind of a new dynamic where the market now thinks the Fed is going to cut next year. The question is, are they going to cut by just the 50 basis points or half a percentage point that they indicated in their dot plot earlier this year, or do they do more? And it really comes down to the sort of type of slowdown that we're going to get. And I think in that environment, any kind of turmoil that starts to seep into equities and the riskier parts of the credit market, any sort of shocks we get from commercial real estate over the next couple of quarters is going to really make owning yields above 4%, particularly in the sort of 5-year part of the treasury market, a very good trade.
Well, and then Liz, what I keep thinking about, and we talk about this in the newsroom a lot, it's like, okay, it does feel like things are settling down. We keep getting these inflation reports, like everything, the softness. And yet, I think about next Friday's jobs report. Does it just take one report to remind us that, wait a minute, guys, it's not a straight line, and that is something that the Fed takes note of?
Yeah, I think it's going to be hard for that jobs report to kind of change the whole zeitgeist. However, I think, to your point, Carol, we're going to have a lot of volatility because the Fed, even the folks that like Waller, who sounded quite dovish, the usual hawk this week that's kind of lit the kindling going this week, but that they're still saying we're watching the data. I mean, of course, if things change and they kind of somehow out of nowhere get a string of the labor market not easing, inflation bubbling back up. I'm not predicting this, but they will have to kind of at least lean in and sound hawkish. So yeah, I think that's why the
like
bond
Waller
market,
today, or no, not Waller, like John Williams today, right? Saying it's quite restrictive, but it's going to stay restrictive for some time. So they're going to kind of keep reminding us of that.
Exactly. And we have Powell tomorrow. He might do the same kind of. I don't think they want the market to get so ahead of them. I mean, the market is ahead, but there's probably a limit to how much they'll, accept that.
And Mike, I wanted you to jump back in because, as Liz mentioned, Powell does speak on the calendar twice tomorrow. This comes ahead of the blackout period next week. What do you think investors want to hear from Powell versus what we would most likely actually hear from him?
Well, I don't think they want to hear him being hawkish. I think they want to hear him sort of being at least sort of mimicking what John Williams said. And I expect they will hear that. I think Powell will play it pretty close to his chest. He'll essentially say, look, they're in a good spot. They just have to sit back and watch the data, which is what all the bond market has to do as well. And ultimately, it's kind of now out of the Fed's hands. The data is going to determine just whether or not the bond market's, thinking of rate cuts coming potentially as early as next March do come to fruition. If inflation continues to fall and if we start to see the employment market weaken, probably not next week, but probably more in the early next year, then you're going to see the bond market will start to run ahead of the Fed. Talking to investors this week, it's notable how some of them have been, as one said to me, I've been through 5 easing cycles. We know what happens here. Once it gets going and the market wants to jump ahead of this. And so I think that's really the key point to remember.
Well, and that's what I was thinking about, Liz. Like, I'm looking at the story that you guys put out. I'm curious what, PIMCO's doing, Double Line's doing. What are the positions? And you guys, say how that they've been kind of loading up on longer dated debt, and that just keeps on rising.
Yeah, and Mike was out there, not this week, but last, kind of visiting all of them, right in their shops and, kind of up front and center. And they were saying, and it's, that didn't work out the next day or so, but they're long-term investors saying, hey, we all love cash. Everyone's saying cash at about 5%, but they were telling Mike, there's going to be a point where you're missing out. Like, it's kind of time to get into further out the curve. And boy, they nailed that call with what happened this week. But that there's a point where, because I always say you can't react fast enough. That's why, all the textbooks say long-term investment, don't jump around, because by time, us average folks say, oh, wow, the cash rate went down so much, you've missed a lot of opportunity in the stock market and the bond market. So that's why they were saying, hey, you've got to get ahead of this and kind of go out the curve.
One last thought, guys. This is not just a U.S. thing, obviously. It's a global thing, right? And you have global central bankers at work and everybody dealing maybe with different economic or inflationary pictures. So, Mike, how does that complicate maybe to what comes next or make it even more interesting?
Well, I think globally the economy is slowing. We haven't really seen the revival of Chinese growth, which everyone expected earlier this year. It's been another one of these missed sort of trades. You've got the oil price not really getting much love here, even though OPEC's just announced it intends to cut supplies. So that's kind of telling you the economy is globally, it is slowing. And it's quite clear when you look at the inflation data across regions, it is slowing in unison. So that tends to suggest that we are going to go through a period of softer growth, inflation easing back, and it is going to give central banks a lot more room to maneuver, although I'm not sure the Bank of England has that luxury, unfortunately for them.
Exactly. Just 25 seconds left, Liz. Part of me is like, I'm so suspect because I feel like I have been fooled so many times over the last couple of years. Is that a fair way to feel, or do you feel like something's different now?
Yeah, Carol, I think I've been you and my team. I'm always like, the promotion, come on, And but I think this time it feels a little bit different, that it's pretty broad-based. And like Mike said, and I think before we went on, I believe I saw Goldman Sachs, European economists, pull forward when they say the ECB starts cutting next year, because they had a soft inflation data out overnight. And so I think we are seeing the disinflation, so we're okay. Maybe we can trust.
All right. So appreciate it, guys. Bloomberg News rates reporter Michael McKenzie, also the fourth brother of Liz McCormick. No, just kidding. And of course, Liz McCormick, Bloomberg News chief correspondent for global macro markets. It's among the most read. It's really what this month has been so much about, and it really is about today's narrative. Thanks, guys. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go ahead of the closing bell. 39 minutes to go until we wrap up the trading month of November. Where has this year gone? This update brought to you by Glenn Mead. Glenn Mead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit glenmead.com to learn more. The Dow right now holding close to the best levels of the day, up 3 346. That is a gain of 1%. S&P 500 index down 4, lower little change, down less than 0.1%, while the NASDAQ composite index is tumbling 104 now, down by about 0.7%. We've got the 10-year yielding 4.36%, the 2-year 4.72%, spot gold down $8.50 the ounce to $20.35, drop there of 0.4%, and a retreat for crude just above $76 a barrel, down 2.3%, $76.10 for a barrel of West Texas Intermediate crude. So what is ahead for Federal Reserve policymakers? Kelsey Barrow is fixed income portfolio manager at J.P. Morgan Investment Management.
We think that the Fed's last rate hike was July. We've had that call for quite a while now. We're sticking to that call. And that makes the moves for yields asymmetric. We can move a little bit higher here for sure. I mean, there's a lot of volatility on every given day. But on the other hand, we can move a lot lower if next year we're looking at rate cuts.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. OPEC Plus has agreed to deepen its production cuts following a slump in crude prices and predictions of a renewed surplus next year. Today, however, crude continues its decline, down 2.3%, $76.09 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, so appreciate it. Carol Master along with Jess Menton, Jess in for Tim on this Thursday. So here's another one of our most read stories on the Bloomberg, something that really got off and running post-financial crisis. So writes Bloomberg's Silas Brown in today's Bloomberg Big Take. He notes that frustrated by the crackdown on casino banking after Lehman Brothers collapse, many of the finance world's animal spirits were left scrambling to find a place that still hungered for big buccaneering bets. In short, the Wall Street of old. So enter private credit. So let's get to it. It's a subject, Jess, we all love to talk about. It seems like it came out of nowhere.
It did.
To now, it's all it seems many investors want to talk about. Silas Brown,
rage.
right? Exactly. Silas Brown is Bloomberg News private credit reporter joining us on Zoom in London. Silas, first of all, before we get into the specifics of your story, why are we all of a sudden seemingly talking so much about private credit? Was there some tipping point, or has it just been a gradual evolution, I should say, and now private lending is really something to talk about because it's now a significant player and getting more oversight or scrutiny?
Well, I think there's been a great hiring spree at Bloomberg, so we have many more private credit reporters.
Fair.
But no, I mean, I think in seriousness, I mean, it's been a process over the past few years as rates have started to rise and banks have become kind of more cautious around backing private equity buyouts, that these kind of non-bank lenders have become more and more significant. And I think fortunate for the market, it's kind of backed by some of the larger private equity names, the credit units of those institutions as well. So I think that kind of helps, add to the buzz.
So talk to us more about these specific investors when you're looking at HPS Investment Partners in the three that you were singling out. What is it about them that was important?
Yeah, so I thought, I mean, like one of the kind of motivations for the story really was we were trying to both tell the story of the kind of rise of this rather sort of secretive giant of private credit, whilst also trying to tell the story of private credit itself and its kind of evolution into the market that it is today. HPS is one of the largest private credit firms out there. It was started a long while ago as a unit of JP Morgan Asset Management by a kind of clutch of Goldman Sachs bankers who moved over to form this unit, and was then bought out in 2016, and from there it's kind of grown and so that's that really, and they do a kind of host of pretty offbeat deals, large transactions. I think they're a good emblem for the rise of private credit for a number of reasons, but one of them is that they're kind of prepared to back themselves. I mean, they do these really, really large transactions on their own through a number of different funds that they manage with different mandates, and they seem to be much more prepared to kind of take on banks and take loans away from away from them too.
Well, that's really interesting, right? And this particular firm, very quiet, secretive, right? Or not secretive, but they lay low.
We use the phrase secretive, but I think look, the large players in private credit are typically public companies,
right?
Apollo, Blackstone, and Ares, and so these are kind of more household names, partly because they're public, partly also because they've had a longer track record, because a lot of them were initially private equity firms. HPS is a kind of pure play credit investor and has remained private, but one of the I guess the revelations might be too grandiose a phrase, but one of the things that we've kind of found out in our reporting was that they're considering going public. So that's kind of part of their potential long-term strategy. So yeah.
So why do you think, though, it's more important it's important that we kind of learn more and more about what these firms are up to? Because when I say they lay low, it's, I feel like there's not necessarily a lot of transparency about the deals that they're doing. They don't have to necessarily. Not a lot of regulatory oversight. But yet we talk about shadow banking, right? This whole other financial sector that is kind of stepping up and playing like banks, but they don't get the oversight and scrutiny that a lot of obviously the publicly held banks and those that are regulated have to endure.
Yeah, like I've got sort of a whole cacophony of conflicting thoughts about this. I mean, I think primarily, I think it was the regulatory push after the financial crisis which really helped lay the groundwork for this market. Regulators became much more wary of banks that are kind of very highly levered and are using customer deposits often, lending to these basically like kind of risky companies, risky because they're very very indebted, and so that sprung these specialist lenders like HPS. But I think now, as the market gets bigger and bigger, the question, as you rightly point out, is, hey, I mean, even though these aren't as levered as banks' balance sheets are, or they aren't also using customer deposits, they're using kind of long-term capital, it is also very big, and regulators don't know nearly enough as they do in the kind of publicly traded debt markets, the more traditional forms of debt finance. And so I think it's definitely a conversation that people have in the market. Where that will lead is far beyond my pay grade.
And private credit is definitely booming, like we're talking around $1.5 trillion, but facing some hurdles here in a high interest rate environment. Are you noticing any sort of red flags brewing that investors need to be aware of?
Yeah, I think again, there's a kind of double-edged thing going on. I mean, the rise in rates in a very direct sense has helped the market because the debt is structured on a kind of floating rate basis, which means that they can enjoy higher returns through no particular skill of their own. They just are enjoying the returns of a higher rate environment. And yet they are lending to companies that are very indebted, 6 times levered. It was at least once the norm. And so these companies are now having to pay a lot more in interest payments. And there are examples of companies that simply can't pay those interest payments anymore, and then you get into these kind of very messy situations where you have to enforce and kind of take over companies. And I think, to be honest, I think we will see more of this, and I think the first half of next year, I mean, certainly more informed people than me tell me that the next few quarters will basically be a bit of an inflection point for the market about whether or not they can handle this.
Hey, Silas, only have about 50 seconds left here. In doing this story, as we all try to learn more about who's in private credit and potentially whether or not they are systemically important to the financial system, what is it that you learned in doing this story that you think is important for our audience?
God, with 45 seconds, this is a real challenge.
Pressure.
50. Look, I think a prevailing thing that I wanted at least to establish in this piece is that you think of your natural thing when you think of these credit investors and these lawyers and these kind of complex, kind of slightly nerdy nerdy roles, you don't think, hey, you know, these guys really can make a lot of money here, and there is a big boom going on with these people. And I think part of this story is to try to kind of illustrate that these people are kind of getting more and more powerful, the individuals themselves, as well as the institutions. And I think that's something that you know, we're trying to do more in our coverage, is to sort of try to follow the individuals as well as the firms.
Right, and they continue to grow their assets. As you say, this firm has lifted assets from $34 billion in 2016 to above $100 billion. So really fascinating. Again, opening a window into that world of direct lending, private credit. Really fascinating. Silas, thank you so much. Silas Brown is Bloomberg News private credit reporter on Zoom in London. All right, let's head to D.C., get a check on world and national news. Off to Nancy Lyons we go. Hey, Nance.
Hey, Carol. Well, the U.S. continues to work on extending a pause in the Israel-Hamas war. Today marks the 7th day the two sides have exchanged hostages and prisoners. U.S. National Security Council spokesman John Kirby was asked if he thinks Hamas even knows where the remaining hostages are being held.
We do think that there are some other groups other than Hamas that might be holding hostages. But that's not to say that Hamas doesn't have visibility on that or doesn't have a way to find out about it. So the onus is really on Hamas.
Kirby says the U.S. has made it clear to Israel that it needs to be more careful in its military strategy when the pause is lifted. Former President Trump is once again under a gag order in his civil fraud trial. A New York appeals court has reinstated the order that bars Trump from commenting about court personnel. The order was imposed after he disparaged a law clerk in the trial. The decision from a 4-judge panel came 2 weeks after an individual appellate judge had put the order on hold while the appeals process played out. Congressman George Santos is the subject of a floor debate this afternoon. He's on the brink of being expelled from Congress for ethics concerns uncovered by the House Ethics Committee that was chaired by Congressman Michael Guest. Guest offered highlights of the report.
It says that Representative Santos sought to fraudulently exploit every aspect of his House candidacy for his own personal profit.
An expulsion vote is expected tomorrow. It's red versus blue when Florida Republican Governor Ron DeSantis and California Democratic Governor Gavin Newsom go head-to-head tonight during a 90-minute debate. The special will be a chance for each governor to present their radically different ideologies to a national audience. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We are 20 minutes away from the trading month of December. We've got the Dow higher, the S&P, NASDAQ. They are both lower. S&P right now, little changed. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are trading mixed right now, with the Dow currently up 375 points. The S&Ps are down 2, while the NASDAQ is down by 0.7%. The U.S. 10-year yield at 4.36%. Gold is down 8. Oil is sinking, and Bitcoin is little changed. Among the main 11 S&P sectors, leaders were healthcare and the materials. Telecom was under pressure, and leaders to the upside in the Dow, Salesforce and Boeing, while Walgreens and Microsoft led to the downside. After earnings, Snowflake rose 7%, while Pure Storage plunged 13%. And in deal news, AbbVie to buy Immunogen for $31.26 a share in cash. In other news, Ford's CFO says its EV prices will equal traditional cars by 2027. And wrapping things up, Dell Technologies and Ulta Beauty report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, to hear live breaking news over your Bloomberg. Type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just under 18 minutes left in the trading session, getting ready to 30 days have September, April, June, and November. Getting ready to wrap up November. I always have to check them. I was like, wait, is this one of those 31? No. It's kind of a meh day when it comes to the equity trade, but what a month it's been. Same thing for the bond market. It's just unbelievable. And it's that time of the year when we are wrapping up not just presents, but the year that was, and just really thinking largely about what lies ahead in the new year.
It's such a big thing, especially with what's going to happen ahead of that December 13th Fed decision, what it means
Does it
potentially.
really matter? Does it really?
We'll get those quarterly projections and dot plots that we know will get changed again in March.
The scatter platter. All right, our next guest has the top 10 items on his mind as we drive to the close on this Thursday. Back with us in our Bloomberg Interactive Broker Studio, real treat, John Augustine, CIO of Huntington Private Bank, a wealth manager, subsidiary of the publicly held bank Huntington Bank Shares. How are you, sir?
Great.
Good.
Wonderful. Ready for the holidays.
I know, right?
As you all were talking
Wrap it up, right? I'm just curious, before we get into kind of your thoughts on the market, you are a subsidiary of Huntington Bank Shares. I'm just curious about the conversations you guys are just talking about. They obviously, in the banking environment, have a good clue of consumers and lending and so on and so forth. You are obviously closely tied to what investors are on their mind. How would you sum up the environment right now?
The environment's still constructive. Now, the consumer has split. There's a credit consumer who's under stress, higher interest rates, but the job market's still good. There's a cash customer that's still plentiful on cash. So what we've noticed since the summer, the consumer attitudes have shifted, which even played through to consumer confidence this week. If you remember, last month got revised down. This month was higher than expected. So there's been a shift, high-end, low-end consumers.
The consumers who have cash, is that the higher?
Higher end.
Higher end.
Cash customers are still there.
And they're important to the, I mean, we talk about consumers generally about important to the economy. Are they more important to the economy in your view in terms of what you see they are doing?
They have been second half of this year.
Yeah.
The question for next year now is, will rates come down middle of the year as the weather warms up, whatever you want to call it, to help bring the credit customer back?
All right.
I'm looking at the KBW Bank Index. If you look for monthly, it's up 15%, but obviously we're on the back of, when you think back to the spring and March with those issues with the regional banks, what are you hearing about the banking environment right now?
So the banking environment, we would say, is trading on the yield curve righting itself next year. Risk of recession coming down, which we've seen in consensus. Then in the third quarter, the yield curve is supposed to right itself, go back to being positive. And that's what the markets are thinking about. That's our view of what the markets are thinking about.
Would you be buying banks here?
Yeah. Baby steps.
Yeah, big guys, little guys.
Yeah, we're
mid,
primarily big. We're primarily a large cap shop, Huntington. But that's one of 3 groups we would be buying: financials, banks specifically.
What else? When we talk about these 10 items on your mind, what else is on your mind?
Well, what else is on our mind is, do we get to exhale next year? Because we've been holding our breath.
Can we just run out of this year?
You know, we were wrong at our shop. We thought the Fed would be off the table in June. That's not happened.
Right. But everybody's been,
We were right on the economy. We were wrong on the Fed. So we were able to guide portfolios pretty well. But next year, do we get to exhale? Will we not wait for the jobs report every Friday, not wait for the Fed meeting every 6 weeks or so? Will we be able to exhale? We think what's going on now, and you all have been talking about it in November, is Americans are exhaling because they're investing some cash, both stocks and bonds. And that's what's going on.
You're
in
seeing
November.
that directly, and it's continuing.
We've been talking about it with our portfolio managers for the last 60 days. Almost.
So is it no longer about moving into cash-like or cash investments?
Out of.
It is moving out.
What about money market funds?
Yeah.
It's same equivalent. I mean, it's a 5% world there. That's new. It was 0 a couple years ago. But now I think people are realizing, the Bloomberg Barclays Ag is up 4.5% month of November. And stocks are up, obviously, large caps.
Right.
I think people are starting to realize that, starting to think about all the media talk, all of our talk about lower Fed funds rate next year and moving out of cash, doing it slowly, both sides, stocks and bonds.
You don't think, though, the Fed gets to 2%? You think
we don't think their inflation call
target
gets to 2%.
3%. And
Stays in 3%.
And you think the Fed's going to be okay with it? They're not going to be like, we want to get it down?
Yeah, they're going to be okay with it. We think what they're going to be watching more next year is the unemployment rate. They'll shift focus.
How significant do you think that gets hurt?
It's going to go above 4.
Not terrible.
And as you talked about, Jess, it's really that SEP, because they really blinked in September. They went from an expectation of an unemployment rate of 4.5 to 4.1. Now what are they going to do in December? That'll be of interest to us. That statement of economic projections, you're right, is going to be a big deal out of that Fed meeting now that it's expected they stay on hold.
Right. So what are you advising clients to buy and sell?
Both ways. You buy something. Now, think about the bond market, though. We're in the camp 4 to 4.5, 10-year next year. So we're a little bit above consensus. Consensus thinks it starts with a 3, we say 4. So at the low end of the range, buy stocks. High end of the range, buy bonds. You can buy either way. Right now, we're kind of in the middle. 10 years kind of in the middle.
So you go back to kind of a balanced portfolio.
Balanced portfolio.
What do you do with some of the high growth areas, the Magnificent Seven, that have often, outperformed again, even though people are saying enough?
Even today, we're seeing some rotation. We're seeing a broadening out. We've been seeing it through the month. There were 2 new sectors that came into play positively in November: financials and REITs, both up double digits in November. So that joined the 3 sectors that the Magnificent Seven are in. We would suggest, and in our 10 things, maybe the other 493 get a shot next year.
So it'll flip. So maybe those gains annually next year still higher, just not as strong because you don't have that more heavily weighted stocks that are pushing things higher.
Yeah, and the expectation that the profits recession in the S&P 500 is over. And profits move up broadly, not just those big growth stocks. That's probably what helps them the most. The other 493, if anything.
So it's not a case of that the 7 stop gaining. The other ones just join the party. Because it's interesting, because I feel like when everybody's...
Because that's where earnings growth is.
Exactly. Do you have a number, favorite investment as we head into the new year, or favorite investment idea? Just got about 20 seconds.
Stay in the U.S. first half of the year.
Okay.
The summer is going to be most interesting next year. Will we go small caps? Will we go overseas? That's what's going to be interesting next summer.
And I've heard both people kind of strategizing
so we're
around
totally
it.
with you.
Be well. Happy holidays.
You too. Great to see you.
Great to see you, as always.
Studio.
John Augustine, CIO of Huntington Private Bank, joining us here in our Bloomberg Interactive Broker Studio. Folks, we're coming up on 10 minutes left in the trading session, getting ready to wrap up the day, and then, of course, the month of November. Carol Massar, along with Jess Manton, in for Tim Stanovic. This is Bloomberg.
Don't miss our...
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Starbucks is making it easier for employees to pause mobile orders in response to staffing concerns, an issue that has contributed to repeated protests by unionized baristas. Now, according to a document that was seen by Bloomberg, reasons for a halt could include higher than expected volume or when employee absences are, quote, negatively impacting the Starbucks experience. Starbucks shares down now by 1%. Amcor Technology plans to build a $2 billion semiconductor advanced packaging facility in Arizona. And with that story, here's Bloomberg's Kimberly Adams.
Charlie, Apple says it will be the first and largest customer of the new Amcor manufacturing and packaging facility. It's an investment that could generate as many as 2,000 jobs and bolster the Phoenix region's status as a U.S. chip-making hub. Amcor says the site in the city of Peoria will start production within the next 2 to 3 years. Amcor is the biggest outsourced provider of semiconductor assembly and testing in the U.S. The Peoria facility is one of more than 24 announced chip investments in Arizona over the past few years, including a $40 billion site that Taiwan Semiconductor Manufacturing, the world's top chip maker, is building in Phoenix. Charlie?
And that's Kimberly Adams reporting. We've got Amcor shares down now by 0.5%. AbbVie is acquiring Immunogen for $10.1 billion in a move aimed at gaining access to some of the hottest new drugs in the cancer market. market. AbbVie shares up 2.8%, but shares of Immunogen are surging 82.5%. Those are our top company stories. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, just a few minutes left in today's trading session. We're seeing some buying into the close as we get ready to wrap up this month of November. I mean, still call it, as I pull my foot out from underneath myself, I still just call it little change, a little higher on the S&P 500, but we're up about 1.4%, right, on the Dow Jones Industrial Average, and just a little bit lower on the NASDAQ. But again, buying in to the end of the month.
And it's been quite a month. So S&P 500 still up over 8% in November. And like I mentioned earlier, on pace for one of its best Novembers in decades.
It's interesting, right? Like you think about what we saw, a rally over the summer, sell off in August,
Right.
and then we've kind of built our way back.
The seasonality patterns have been pretty spot on.
Has it really?
Yes.
Yeah. All right. So interesting, because I was just thinking about what John Augustine was talking about, the seasonality next year, right? That in terms of when we get into the summer, he talked a little bit about that. So it's interesting to see.
Also an election year.
Election year, and I do wonder how that's going to play into it. I was actually talking with the head of a bank here that's based here in New York, and it was interesting to see, that geopolitics is something that is on everybody's mind, and the U.S. Election in a big way.
Especially when you think about not only just what was going on with Russia and Ukraine, but then also with Israel and Hamas now, just given that, what does that mean potentially also for commodity prices, inflation, and obviously the trajectory of the Fed and other central banks.
Right, and it does, and the other thing is just how it seems like investors increasingly have gotten used to stuff. Serious stuff being kind of coming at them, and it's like, oh, it's just another thing, and there might be a day reaction, and then it's kind of back to the investment environment, and like looking at fundamentals. I'm thinking about, the buyback that GM did, and of course it's to appease investors, right, in terms of some of the concerns about their EV strategy, kind of be patient, but we heard Charlie talking about, another deal, another big biotech company being bought. I mean, companies are making very big decisions in an environment where it's safe to say we still have a lot of questions.
I would also say that the buyback blackout period for a lot of companies rolled off at the end of October. So coming into this month, a lot of companies were able to start repurchasing their stocks. So there's another pillar of support for the market this month.
Life is good. The first Cybertruck has rolled off.
Here we go.
Cybertruck priced at $61,000, available in 2025. That's the cheapest Cybertruck. Remember we said about $50,000, but yeah, it's never $50,000. And they have an estimated range of 250 to 340 miles. So some headlines crossing the Bloomberg. We'll have you more as they make their debut. All right, everybody, Beyond the Bell, starting right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day, Katie Greifeld and Scarlett Fu counting it down to the closing bell. And here to help take us beyond the bell with the global simulcast, we're joined now by Carol Masser and Jess Menton, bringing together all of our audiences across radio, television, YouTube, you name it. And Carol, it looks like in the last couple of minutes of trading, we did get a spike in the S&P 500, but we also know it's the final trading day of the month.
You know why?
Tell me.
It's because the Cybertruck has rolled out, and we know how much it's going to cost, $61,000. That's the cheapest, and it's going to be available in 2025. Do you know Tesla's up about 20% this month?
Magnificent Seven, yeah.
But it's because of the Cybertruck, Katie.
Is it because of the Cybertruck? Yeah, I mean, of course, it is a moment for Tesla, and it's really been a moment for markets because beyond the Magnificent Seven, we know that, of course, Jess, this rally has really broadened out this past month.
Especially when you're looking at the S&P 500 heading into that final minute of trading ahead of the closing bell. But you look at it, it's up close to about 9% this month. So this is its second best November since 1980 if you go look at SEAG Go and the terminal, Scarlett.
Yeah, you know, I'm looking at Tesla shares. They're still down 1.7% on the day. I know that we've been pretty obsessed with the Cybertruck for the last, I don't know, 15, 20 minutes here, looking at the pictures. And
Just 15 minutes?
I think, okay, last 2 years. How about that? But we really got some concrete
Hey,
details
it
the
goes
last
0
15
to
minutes.
60 in 2.6 seconds. I'm really channeling Matt Miller right now.
There you go.
We could
There
really
go.
use his expertise on this.
Yeah,
I'm
maybe
sure he
we
has a
can
lot of
get him
opinions.
to phone in. He might be busy though. Let's take
call
a
us.
look at these closing bells. Of course, the bell is ringing. People are clapping. You take a look at how equity markets finished up. It's green for the S&P 500. Had really accelerated into the close, up about 0.4%. The Nasdaq couldn't quite get there. Of course, it had been looking at losses of about 1%. We'll finish about 0.2% lower. You take a look at the Dow, outperforming up 1.5%, Carol. And if you take a look at the small caps as well, I believe they strung together some gains as well.
All right, good stuff. I'm going to go back to the big cap index, the S&P 500. Most names in the index actually higher for the Thursday trade as we wrapped up the month of November, Scarlett. 400 names to the upside, 98 to the downside, 5 unchanged.
And we see volume, huge pickup from the 20-day average, up more than 30%. That's as there's an MSCI semi-annual index review rebalancing taking place today. Also, end-of-month options expiring, and of course, window dressing for some mutual funds because of the end of the month, and for them, some of them, their fiscal year. Okay, let's look at the sector performances. Healthcare equipment and services, insurers, and household and personal products each up at least 1.5%. On the downside, Tesla is helping to drag the autos and components index lower by 1.6%. Chip companies and media and entertainment. So a lot of those big tech names are the decliners today.
All right, good to know. So let's get to some of the individual gainers, if I may. Salesforce. Wait, is that right? Weren't they higher today?
Yeah.
Wait, did I move it? Wait.
No, I see
Oh,
Salesforce
it is. It's up
higher.
9.4%.
It's there, yeah.
Sorry. Fat fingers for me on the terminal as I was pulling it up. Okay, so 9.4% higher. So pretty much holding on to the day's gains and finishing at session highs. Top of the S&P 500, the number one gainer, in fact. They gave a profit forecast. We all were breaking it down last night after the close. Their profit forecast for the current quarter, top analyst estimate. So it did show some strong momentum in its cost-cutting campaign. So big one and a big gainer there. Snowflake, another one. Certainly in this kind of application software space, if you will, up about 7%. It's a cloud software company, reported third quarter results. It beat expectations and also gave an outlook that is seen as strong. So again, a 7% gain there. I want to mention Dollar Tree, home to Dollar Tree and Family Dollar. It was top in the NASDAQ 100 today. Third quarter comp sales, they were a miss. They cut its annual comp sales forecast for Family Dollar, slightly lowered the division's net sales guidance, but I don't know. The company, reviewing its portfolio and identifying stores for possible closure. So maybe investors liked some of that in terms of what they heard. So that stock was up about 2% in today's session. And Immunogen, I got to mention, soaring some 82%. That's what happens when AbbVie agreed to buy the cancer drug maker for $31.26 a share in cash, equity value of more than $10 billion. And this is basically really cementing and helping to accelerate AbbVie's entry into ovarian cancer drugs, treatment specifically, but the cancer treatments overall, Jess.
Well, looking at some of the decliners here, of course, going to start off with Tesla, as Scarlett was mentioning, down about 1.8% today. So that was its worst day since November 22nd. So not too long ago, but this is the 8th biggest weighting in the S&P 500. And as we mentioned earlier, it's showcasing its first Cybertrucks as part of that live streamed event in Austin. Another one I'm taking a look at today, though, is Ford. That's ticker symbol F. It's down about 3%. So worst day since November 9th. So that does come after the company actually did restore its financial guidance, though it did say profits would come in lower than earlier projections, a lot of that being due to rising labor costs. And of course, Meta, another company, 1.5% down, worst day since actually just yesterday. But looking at that, the U.S. Federal Trade Commission did claim that its in-house trial violated the Constitution and asked a court to immediately halt the agency's bid to change a 2020 privacy settlement. But if you look at a monthly basis, all three are up, and as Carol mentioned earlier, Tesla up about 20% month to date.
All right, let's get over to the bond market, my favorite place to be. And we actually saw that sell-off resume. We've been getting used to lower yields, not the case today. Of course, we did get some mixed economic data. You can see that percolating through the curve right now. 2-year yields up 5 basis points, and more so if you go out the curve. I thought it was interesting, though, if you think about, we talked a little bit about what we heard from John Williams, but San Francisco Fed President Mary Daly, she also said today that interest rates are in a, quote, very good place to control inflation. She's not considering cuts. Of course, this is all a drumbeat until we hear from Jerome Powell himself speaking tomorrow. One of his last opportunities to speak before, of course, the December Fed meeting.
Yeah, I'm glad you bring up what Mary Daly said in the context of she's not considering rate cuts because so many in the market have looked ahead to rate cuts. I believe it was Chris Waller who, as Mike McKee was reminding us earlier, did talk about rate cuts generally without giving any kind of timeline, and that set people off to the races. Like, okay, it's happening, even though that was in the vaguest possible context.
Faster than a Cybertruck.
I think this is a pretty interesting headline. Money market fund assets rise to a fresh record, $5.84 trillion. This is coming from the Investment Company Institute. You know, Jess and I just had on John Augustine, Chief Investment Officer at Huntington Private Bank. He talked specifically, though, about investors moving out of cash and looking to put that money to work. So less going in. So that's what he's seeing on a day-to-day basis. But again, some recent numbers from ICI just showing it's at a record.
And heading into tomorrow, Powell's actually on the calendar twice, speaking ahead of the blackout period next week. But something else that's an anniversary today, it's actually 2 years since Powell actually dropped transitory in front of Congress.
kidding.
It is. Today marks 2 years, so it was November 30th of
Just got a
2021.
chill,
So
actually. Wow.
it's been, and if you look at the S&P 500, it almost looks like it's gone nowhere, but it's pretty much recouped all of the losses. But it's been so dizzying over the past 2 years when you think about where we've come and gone. But when you look at the S&P 500 on the chart, back to those levels where it was 2 years ago.
Yeah, it has certainly been a long, strange trip. We do have some earnings, so I want to talk about Ulta Beauty here because Ulta right now, shares are up about 5.6%. You take a look at what we got. We saw third quarter EPS beating estimates coming in at $5.07. The estimate had been for $5. Still sees fiscal year operating margins between 14.6% to 14.8%. The estimate there had been for 14.7%. So you take a look at some of these numbers, and clearly the market sees good news here. We're going to continue to keep an eye on that.
All right, let's move over to Marvell Technology. It's a chip device company, and their third quarter numbers, on the bottom line, it is a beat by 1 penny, adjusted EPS of 41 cents, revenue coming in slightly better than expected, 1.42 billion, but the outlook for revenue for this quarter, the fourth quarter, 1.42 billion, analysts were looking for 1.46 billion, and you can see those losses in after-hours trading deepen, now down 1.3% in after-hours trade.
Just want to get to Dell because last time that they reported their quarterly update, the stock rallied 21% to a new record high. It's a different tone. The stock is selling in the aftermarket. Third quarter total net revenue of $22.25 billion, a little bit light. Street was looking for $22.98 billion. Third quarter adjusted operating income, $1.96 billion. That is a beat. $1.78 billion was the Street estimate. Third quarter adjusted EPS, $1.88, and that is about 42 cents better than what the Street was expecting, but the stock is down about 3.5%. Keep in mind, the stock is up almost 90% year to date. Looking last time around, it was kind of hopeful in terms of a recovery in the market for corporate technology, but we'll look for some insight on the call and in the press release to see maybe why there's so much negativity in the aftermarket here.
And Bloomberg,
could be just expectations.
Yeah. Also, Bloomberg Intelligence heading into this report was signaling kind of this cautious recovery that we have seen in the PC market. So they were expecting sales to slip about 7% compared to the 13% drop in the prior quarter.
So, Katie, do you have a Cybertruck in your...
Not yet. I mean, apparently you only have to put $250 down to reserve, so I'm thinking about it, but...
Get on the mailing list, essentially.
It's a little pricey, the
pay
sticker
later.
there.
Is that what that is?
Here
we go.
BNPL, that's a good point, Carol. I'll think about it.
All right, guys, that's a wrap. Our cross-platform coverage, wrapping up the month of November and getting ready for the last month of trading of 2023. Radio, TV, YouTube, Bloomberg Originals, we do it all across the Bloomberg world. We'll see you again tomorrow.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, yes, indeed, everybody. Wrapping up, as we said, the trade here, watching some of those stocks just out with earnings in the aftermarket. Dell still down about 2% here. We'll watch for any additional headlines. In the meantime, as you know, just about was it 24 hours ago or so, we were talking a lot about the passing of Charlie Munger, Warren Buffett's partner in building Berkshire Hathaway into the behemoth it is today. And then last night word came that former U.S. Secretary of State Henry Kissinger, who advised multiple presidents and who really helped define or did define American foreign policy during the 1970s, had passed away at the age of 100. And just, I think, as we look at everything that's going on geopolitically, we think about the impact he had on our world, how he continued to be really a go-to voice on geopolitical stress points. Bloomberg opinion columnist Andreas Kluth writes about the part of his legacy that will not make headlines this week, shaped by his realist perspective and more. So we knew we wanted to kind of talk to him about that. Andreas, as we said, Bloomberg opinion columnist covering U.S. diplomacy, national security, and geopolitics. And previously he was editor-in-chief of Handelsblatt Global and a writer for The Economist. He's on Zoom in Washington, D.C. Andreas, before we get to your column, how are you thinking about the impact and passing of someone, Henry Kissinger, who saw so much, shaped so much, and who did also both have fans and critics?
Jess or Carol, I don't know which of you that was, but did you say fans and critics?
Yeah.
Especially based on the reader letters I've gotten since my column appeared, but in general, it seems like the universe is split in half. Half of the world thinks he was evil and a war criminal. There was a famous Christopher Hitchens book that actually wanted him tried as a war criminal. And the other half thinks he was a great statesman. So can it be both, or is it somewhere in between? I think it can actually be both. But when you said, what are the headlines? What is he known for? He's most known for his very controversial policy in the Vietnam War and widening the war to Cambodia, bombing Cambodia. Those are some of the war crimes. Others may be his policy in East Timor, the coup in Chile, and of course his opening toward communist China and much more, his Middle East shuttle diplomacy. I chose, because I recently moved from Germany, where I was a journalist for 11 years, to cover a different aspect, because of course, Kissinger was a refugee of the Holocaust with his family. He was born as named Heinz. He became Henry after they fled relatively late in 1938 to America, where 13 members of his families that didn't flee with them were killed in the Holocaust, and he later returned as an American army soldier and even liberated a concentration camp, which was traumatizing. He's Jewish, obviously. I should have done. And at that point, he was no longer Heinz, but Henry, and he spoke with these, as he later joked, every language he spoke with an accent. And to me, the psychologically, the easiest thing, the most understandable thing would be for him to hate Germans. And he did exactly the opposite, and because he had a lifelong, very tight relationship with Germany, with his native town of Fürth, where the Kissingers happened to know my family, who also lived in Fürth at that time. And with the soccer team locally, right up to his last days. He was a fan, looked at the scores, they were second division, didn't matter. He advised and was close to every German chancellor. He was for unification. He accepted Germany's post-war atonement, and he thought very deeply, because he studied European history in his doctoral dissertation and all of that, about German history. And I chose in my obituary to focus on that aspect, because for Germany, he was huge. He gave that country, his native country, redemption of a sort. He could have hated it as a Holocaust refugee, and instead, in that way, he showed, I think, magnanimity, which is not,
Well, Andres, let me just jump in for a moment. What was the question you always wanted to ask him?
Well, I read his books, attended many of his talks, which were in German and English, and finally I had the chance to meet him, and I wanted to ask him about my grandfather, who was the doctor of his father, but also I wanted to ask him this simple question: why did you, all these decades, not make a bigger deal about the Holocaust in general when you were dealing with Israel, but specifically when you're dealing with Germany? But I couldn't. There was a lot of commotion. people pulled him away, and also it kind of got struck in my craw. I was a little bit emotional, so we made a bit of chit chat, and then it went on. So I didn't get to ask him, and I wish I had, and now I can't ask him anymore. But I think in the column I try to go into how he thought, and that he did try to rise above it. But for some reason, and this is still a mystery to me, for some reason, he did not make this an issue in the 50s, 60s, all throughout, when he was very frequently and very closely in Germany.
Well, and Andres, you're right. Hating would have been psychologically easier, but as a statesman, a scholar, and a mensch, he chose to see Germans and their history and their vast, complex totality. I mean, that's a really big concept. Jess, I think about with everything that's going on geopolitically, it's a concept that I feel like we could apply to so much right now, maybe should.
Right, and especially when you think about what those types of traumas did, but the fact that he didn't make more of the Holocaust when he did deal with Germany, when he could have, right?
Right. So it is interesting. I mean, it's a very big concept, Andreas. I mean, why is it so important to understand this for you and maybe for us all?
The fact that he thought that he grasped the vast totality.
Yeah.
I think, I mean, it was 24 hours ago since I wrote the column, and now I'm getting all these reader letters, and I think we should approach his life, his biography, with a sense of the vast totality of it, because there are contradictions. I didn't mean to gloss over his record. He did. I mean, about 100,000 civilians died in Cambodia because of American bombing that was in secret, had his blessing, shall we say. And there were other episodes, a right-wing coup in Chile. But the man thought in vast, he was an intellectual. He wrote on the aftermath of the Napoleonic Wars and nuclear strategy. He had a sense of complexity, and he was himself a complex man. So no single column, no single obituary will do justice to him. And I see all sides of the man, the shadows and the bright spots at the same time. But because it's been quite emotional, because there's a family history, because I observed him in Germany and met him in Germany, I did want to just add this aspect that for that nation, for the Germans after the war, I end with a quote by Helmut Schmidt, a chancellor. It says, that was his importance to us. He understood and then explained to the rest of the world, Henry Kissinger, that we had atoned, that we had learned our lesson, we the Germans, and that you could now trust us. That is a big, big thing. And nowadays, Ukraine war and everything, Germany's playing a bigger role again. And I remember Bloomberg just this year talked to us, Kissinger talked to Bloomberg earlier this year.
Yeah.
Said, if anything, he's worried that the Germans, again, as before World War I, he always goes back far, may not even understand how their own position in this international system and in history is changing again.
Right.
He worried about that. But Germany is important, and he helped rehabilitate it.
I just think it's a very thoughtful column as we look at the life, the legacy of someone who was, just saw so much, certainly in geopolitics. Andreas, thank you. So appreciate it. Andreas Kluth, columnist at Bloomberg Opinion, joining us on Zoom from Washington, D.C. You can read that column in its entirety. Just head to Bloomberg.com. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Lots of earnings after the bell, and we've got you covered. Dell reported revenue that declined more than expected, buffeted by continued sluggish corporate demand for PCs. After hours, Dell down now by just about 1.8%. Marvell Technology forecast adjusted earnings per share for the fourth quarter of between 41 and 51 cents a share. After hours, Marvell pushing higher, up now by 1.1%. And semiconductor maker Ambarella reported revenue for the third quarter that did beat the average analyst estimate. After hours, we got Ambarella up now by just about 3.9%. What a close on Wall Street. As we wrap up November, we move on to the trading month of December. Stocks saw a late day rebound, notching one of their biggest November gains on record in a surge fueled by speculation that the Fed will end its interest rate hikes and cut rates next year. Now, into the close, the Dow was up 520 points, now at 35,950, a gain today of 1.5%. S&P up 17 at 4567 for the S&P 500 index, up 0.4%. NASDAQ, though, a down day. The NASDAQ Composite Index down 32 points, a drop there of about 0.2%. 10-year yield 4.33% for the 2-year, 4.70%. Gold at $20.36 the ounce, down $8 today, down by about 0.4%. And West Texas Intermediate crude oil was down $2.11 a barrel to $75.75, a drop today of just about 2.7%. So again, recapping a mixed Thursday on to December, briefly checking Dell one more time after hours, down now by 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
And as Charlie noted to us, Cathie Wood making quite a comeback after trailing the NASDAQ 100 for a prolonged bouts of time this year. The ARC Innovation ETF gained a record 31% in the month of November, so it's her best month ever, as investor hopes that the U.S. will be able to start cutting interest rates next year, propelled gains in risky assets. So her best month on record.
It's amazing.
Yeah, right? And a comeback, because we saw she certainly has had some difficult years. So very, very different. Anyway, let's get back to something that certainly impacts a lot of Americans. Bloomberg editorial board writing about this in September. The U.S. prescription drug market, very different. Patients and providers don't make decisions about whether a treatment offers good value. Middlemen do. These intermediaries, which design prescription drug coverage and negotiate discounts for health plans, get bigger fees for more expensive medications. And as a result, you've got payers such as Medicare that can't be sure that they're getting a good deal. And other countries do it very differently. So let's get to it. Some thoughts on how it all works in the U.S. With us is Ji Bai, Professor of Health Policy and Management at Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, of course, founder of Bloomberg LP and Bloomberg Philanthropies. Ji is on Zoom in Washington, D.C. Ji, nice to have you here with Jess and myself. Talk to us about this, these intermediaries, pharmacy benefit managers. You know, I think we all thought that they were going to make it all more efficient, and I guess we thought it would be better for consumers. Why is it not working out as we all thought?
It's actually not working for cheap generic drugs. So we found, $100 paid by Medicare, actually $41 will go to PBM just as a spread, as profit. And then manufacturers only got $30. So in other words, PBM's profit, the spread is already 30% more than what the manufacturers get in their revenue. And then pharmacy got $17, and then wholesale got $12. So you can see this whole supply chain is very inefficient for the generic drugs.
So how did that happen? I mean, how is it that and we've done some stories, certainly Bloomberg Business Week has done some stories. Increasingly, we're looking at what's going on. How can it be better? You guys did a study. What did you look at specifically? What did you find?
Mm-hmm. So, why this happened? Everybody want to get a big cut, a high spread if it's possible. But in most markets, you can't because of competition, right? If you are too greedy, you have a high cut, guess what? You'll be driven out of the market. But the PBM market is very different. It's not very competitive. So this lack of competition allows the PBMs, like we have only 3 large PBMs, to generate such a high, large spread. So in other words, if you are powerful, you can charge high from insurers, and then you can pay low to pharmacies. That's what we found in our study.
What's shocking, Money would say, is if the government was involved, do you think that they would be saying, hey, guys, this isn't okay, this isn't right? And I do feel like there's slowly some momentum to do that. What are you anticipating potentially on the regulatory front?
Right now on the Hill, there's some proposals to ban the spread pricing. But guess what? If we do not change the market dynamics, we cut the spread pricing, and then other things will pop up, right? It's like a water bed effect. So I think fundamentally we need to address the market inefficiencies. Insurance actually works very well for high cost, expensive, low frequency things. That's why our car insurance does not cover oil change, right? Our home insurance does not cover gutter cleaning. But for generic drugs, they're relatively cheap. So using very complex insurance to cover it actually is not efficient. Studies found for many patients, the out-of-pocket cost is already higher than the cash pay. Let's say if they go to GoodRx, Mark Cuban Cost Plus company, or Amazon Pharmacy, without using their insurance, they pay a lower price than if they use their insurance for the out-of-pocket. So that tells us insurance actually is not efficient. Let's get it, let's say push.
Yeah, no, it's fascinating. And I was thinking about, and kind of prepping for this story, other countries, whether it's Australia, the UK, they don't have this middleman because they've got a single negotiator, the government, their governments, that can press essentially the drug manufacturers, right, for discounts. And they regularly are doing oversight, doing cost effectiveness assessments. And so their prescription drug spending is a fraction of the United States. So anytime you throw in a middleman, there's going to be increased cost. But it does sound like it's getting out of control. You say, though, in particular, that there should be an end to insurance coverage of low-cost generic drugs. You're saying we don't need it, right? Because they're so inexpensive.
Right. And actually, that will save everybody money. Right, we get higher take-home pay, we get lower premium, or they can put government or sponsors can put more money in our health savings account. Then we can use it for buying the generic drugs. Right now, it's $5 per month from Amazon Pharmacy, and then we can use that for all sorts of social determinants of health. Right, and that can actually improve our health.
Yeah, it's interesting. It's certainly, you wonder if it'll come up in the upcoming politicians when they are out on the campaign trail for the November elections, because it certainly impacts a lot of Americans. Ji, thank you so much. Ji Bai, she's professor of health policy and management at Johns Hopkins Bloomberg School of Public Health, joining us on Zoom from Washington, D.C. Hey, we did want to mention a couple of headlines that crossed concerning Walt Disney, reinstating its dividend to 30 cents a share for the second half of 2023. So again, declaring that cash dividend. I want to talk to our Bloomberg Intelligence Technology and Media Analyst, Geeta Ranganathan, on the phone from BI headquarters. Geeta, I'm seeing, I thought the stock up just a hair in the aftermarket, just moving a little bit, maybe up about 0.4%. I'm wondering, did they take note of what General Motors did, or is this the activist investors? What's your read on this?
Yeah, I think it's a little bit of all of the above. And, they had actually kind of hinted at this, Carol, during their last earnings call. So they reported some pretty encouraging numbers at that point, and they said that they are ready to kind of restore the dividend. Now, the dividend is something that they had suspended back in, 2020 when they were hit by COVID and everything had kind of come to complete standstill. But this is definitely a positive sign for investors, and I think they will share this.
There were some earlier headlines today coming out of CNBC that Nelson Peltz, one of the activist investors, that's been pressing for more change at Disney, specifically for 2 more. Now it looks like he's asking for more than 2 Disney board seats. Is he likely to get that? That seems pretty aggressive.
Yeah, so Disney actually rejected his offer, and they came out with their own statement, kind of detailing why they rejected it. They, it's kind of almost a drama within a drama here, because they think that this is really a kind of personal vendetta, if you will, against Bob Iger by Peltz and his friend Isaac Perlmutter, who actually used to be employed at Disney and used to run Marvel. So there's a little bit more, in terms of the backstory and some undercurrents. But I don't think Peltz is going to get what he wants. So this is pretty much looking to turn into a pretty nasty proxy fight.
Not exactly what you expect from the Magic Kingdom. Just got about a minute left here. What's the important thing you think for investors, our Bloomberg audience, to kind of be focusing on as we see Bob Iger back, activist investors or an activist investor, very vocal and pushing for change? What is it that you are watching so closely at this company?
So I think the one thing, obviously the dividend was a big thing that we were looking for that obviously has been resolved right now. The other main thing I think that we're looking, especially over the next few weeks, is how they kind of close out the Hulu deal. This is something that they're currently working with Comcast. They're to acquire about 33% of the Hulu stake from Comcast. And then I think the bigger question is going to be the strategy for ESPN moving forward. Now that they have said that they're really not planning any of the linear, they had initially pointed to, an asset sales of their linear TV networks, including ABC. They've kind of walked back those plans. So it's going to be interesting to see how they kind of articulate their whole TV network strategy, including one for ESPN.
It's going to come to Disney Plus or something because it's a great story on what's going on at the company. Geeta, we always appreciate it. Bloomberg Intelligence Technology Media Analyst Geeta Ranganathan joining us on the phone from Bloomberg Intelligence headquarters. Disney shares, by the way, they've rallied almost 17% since a low in October, Jess. So maybe not up on the year, but nonetheless, they've been bouncing back with all of this activity and activist investor stuff going on.
No, especially when you think to that point of where it's come, even though when you look year to date, it up being 7%. But let's get a check on the latest world and national news with Lancey Lyons in Washington, D.C.
Thanks, Jess. Hamas is once again freeing Israeli hostages in exchange for more Palestinian prisoners to be released. This is part of a last-minute deal to extend the ceasefire in Gaza by another day. The Israeli military says 2 hostages were released earlier in the day, with another 6 just being freed. It's unclear how long these exchanges will continue, but U.S. National Security Council spokesman John Kirby says they will keep negotiating.
We're working at it literally by the hour to see if we can get this 7th day turned into an 8th and 9th and 10th and beyond. But all I can do is tell you where we are right now, and we're glad that we got a 7th day out of this.
National Security Council spokesman John Kirby. Democrats on the Senate Judiciary Committee have approved subpoenas for 2 witnesses relating to the ethics questions facing the Supreme Court. They did it going against Republicans' wishes.
Chairman Dick Durbin wants testimony from Harlan Crow, who invited Justice Clarence Thomas on luxury vacations, and Leonard Leo, the influential advisor on Republican court nominations.
The court's new code of conduct falls far short of what we would expect from the highest court in the land. I'm only seeking subpoenas for 2 people who have refused to comply with this committee's oversight request for months.
Ranking Republican Lindsey Graham.
I don't buy anything you just said. When you say you don't want to destroy the Roberts Court, I don't believe you.
Graham said the subpoenas would never get the required 60 votes in the Senate. In Washington, Irv Chapman, Bloomberg Radio.
Congressman George Santos has been the subject of a floor debate this afternoon as his colleagues mull over whether to expel the New York Republican. The chairman of the House Ethics Committee, Michael Guest, spoke in favor of expulsion.
Mr. Speaker, George Santos has built his persona, his personal and political life, on a foundation of lies.
An expulsion vote is expected tomorrow. Global News, 24 hours a day.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. I'm Charlie Pellet. We do check markets all day long here at Bloomberg. The Walt Disney Company has declared a dividend of 30 cents a share for the second half of its fiscal year, following through on a pledge to restore the payout, which was halted during the pandemic. That payout, by the way, will be made on January 10th to shareholders of record on December 11th. After the bell, Dell reported revenue that declined more than expected, buffeted by continued sluggish corporate demand for personal computers. After hours, we do have Dell shares down now by 1.1%. Semiconductor developer Marvell Technology forecast adjusted EPS for the fourth quarter of between 41 and 51 cents. Estimates were for 49 cents. Right now, we do have Marvell Technologies moving higher by 1.5%. And the semiconductor maker Ambarella reported revenue for the third quarter that beat the average analyst estimate. Shares of Ambarella after hours up now by 4.3%. What a finish to November. Dow Jones Industrial Average rallied 520 points, up 1.5% today. S&P up 17 points to finish the month at 45.67, a gain of 0.4%. NASDAQ was down 32 points today, a drop there of just about 0.2%. 10-year yield 4.33%. The 2-year yield 4.69%. Spot gold down $8 the ounce to $20.36. And West Texas Intermediate crude today down 2.7%, $75.77 a barrel. So as we move into the trading month of December and on to 2024, what are the questions on the minds of investors? John Augustine, Chief Investment Officer at Huntington Private Bank, was a guest right here on Bloomberg Business Week.
Next year, do we get to exhale? Will we not wait for the jobs report every Friday, not wait for the Fed meeting every 6 weeks or so? Will we be able to exhale? We think what's going on now is Americans are exhaling because they're investing some cash, both stocks and bonds.
And you can hear more of that conversation on the Bloomberg Business Week podcast, recapping a 520-point gain for the Dow Jones Industrial Average today, up 1.5%. S&P today up 0.4%, ending the month heading into December at 45.67. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet with the Bloomberg Business News Flash. Carol Master along with Jess Metton. Jess in for Tim on this Thursday. Hey, dropping tonight the latest episode of the Business Week show. It is the world's first late-night TV talk show about pop business.
I'm excited.
So it's good stuff.
It's great.
Money, power, culture, and it's hosted by none other than Bloomberg Business Week contributor Max Abelson.
The star is here.
He is indeed. And like we've talked about themes, Max, and I'm thinking genius, risk, moonshots, ambition, reputation, and tonight you get into imagination.
Connection. You know, I just want to say, I don't think, of all the time that I spend thinking about the show, I don't think I ever think about the Business Week show with more joy than when I'm here talking with you about it, Carol.
Max
it makes
Abelson,
me feel so
we
good.
love you. Can I just adopt you?
Absolutely. Imagination is such a fun theme. The episode tonight is really cool, and our guests are, they're very far out. We have two fabulous artists.
Before we get into it, how did you guys think about imagination? I just feel like you can go so many places.
Well, we tried to be honest in the magazine. You know, it's like we tried to think about if there's an interesting feature story that makes it into Bloomberg Business Week, like what are the features that are probably sort of baked into it? And that's how we came up with risk and ambition. And it's like, I think it's genuinely true that the coolest stories sort of always have a little bit of imagination. There's always someone who is able to see in her or his mind's eye something that doesn't exist. And I feel like a really good business story will kind of chronicle either the triumph or the catastrophe that comes from that.
Well, and I was going to say, I was thinking you could have done technology so easily, right? Because but you went in a different way.
Yeah, I was curious, how did you do that?
Well, what we decided to do instead of, interviewing, which we totally could have done and would have been interesting, maybe someone who's like a particularly creative CEO in tech. Yeah. We spoke to artists, and we talked to two artists who, on paper look like they have similar careers. Theaster Gates and Judy Chicago. They're both painters. They're both sculptors. They're both very, very beloved, accomplished artists. Maybe listeners are familiar with their work. But they're so different, and their views on the role of imagination in your career and the role of imagination in their own lives were so different. It was so satisfying for me to be sitting across the table from them and to sort of help tease out and invoke these very, very contrasting views of the role of imagination in the world.
So what was the most surprising thing that you learned from them?
Theaster Gates told me, and I really hope listeners still tune in tonight to the show. I don't want to give anything away, but Theaster Gates spoke with eloquence, basically, about this kind of Buddhist period that he's about to enter of giving everything he's made away. You can think about Theaster Gates's career as he's like basically just as much an artist as he is like essentially an urban planner. He buys up abandoned buildings in Chicago and he transforms them. It's almost as if his medium is like space. And he has now accumulated and helped transform these really profound spaces. He has an abandoned school that he's turned into something brand new. He has these old industrial spaces, and he says that he's going to begin giving everything away.
I love that concept. Hey, listen, you actually obviously talked with him, and he talked about the model for urban transformation. Here's a little teaser of tonight's episode of the Business Week.
I just locked in to my neighborhood, and I'm like, oh, those things that I would normally try to find in another place, why don't I bring them here? I'm gonna build the amenity. And if I build it for myself, it means 500 people, 1,000, 5,000 people could also benefit. And it also means that the model for neighborhood transformation, economic development, if you will, that model is playing itself out in real time. Then, you know, and this is where I feel now as my hair whitens, that there's a way in which the work that's been accumulating, there are now other people who can grab the baton and do bigger, greater works.
All right, that, of course, is Theaster Gates on tonight's episode of the Business Week show. That's at 10:30 p.m. Wall Street time on Bloomberg TV. Max Abelson is the host of the Business Week. I love that idea, right? In a world where we accumulate so much, want to hold on to so much, he actually is ready to kind of let it go.
Isn't his energy just like so far out?
Yes.
I really wish that I had, I think it might be something like gravitas, or maybe it's the physical manifestation of his imagination. He just emanates the sense of like having a really cool inner life. I'm going to really try to age into that.
He also mentioned about others grabbing the baton. Did he give any clues as to who he thinks that could be?
Well, just to be very clear, one of his great collections is vinyl records, which I collect. I've never told you this. I have thousands of very good vinyl records. I have a great collection, and I definitely bluntly asked him.
I really want to adopt you.
Well, you'd be welcome to. But I definitely asked him if I could have a record. And you know, it's funny because he and Judy Chicago, you know, both in some ways are embraced and beloved by the institutions of the American art world, but both of them kind of exist a little bit outside the market. You know, what he does is very much woven into questions of real estate and assets and debt and how the real estate market in Chicago comes up and then comes down. Judy Chicago talked to me about how it's helped her imagination to be removed from the market. And she basically described, instead of being treated like a stock that's exchanged on the market, like just spending 50 straight years in her studio as like this incredibly liberating thing. I'm sure for some artists, their artwork comes from engaging in the market. And for both of them, it seemed like their imagination has been stoked by being apart from the market, which I found super interesting.
Max, how did it change your thinking about imagination?
Well, it made me want to spend more time being imaginative. You know, journalism it's not really our prerogative to sit around and to kind of make things up from whole cloth. You know, it's not our job to come up with things that don't already exist. Our job as journalists is to really take what we know, to take facts, and to craft them together into stories that haven't been told. But you can still do that with imagination. And so it made me want to try to be imaginative, even within the bounds of our industry. But you know, it just as taking risk or being ambitious takes real thought about how you want to do it and how you don't want to do it. I feel like the same is true with imagination.
Yeah, I love that. Oh my gosh.
How long does it take you to come up with these ideas?
Well, you know, I have to say I work with just a remarkable team. I was just in this building with Edwina Otira, my director, and we spent a couple of months with. I want to give Joel Weber a shout out and Kristen Powers, Adam Comiskey. I have a really wonderful and full team of really smart people, and we sat around for a couple of months before filming to think about like, What do we want to make here? You know what? And you know what I guess that is? Some kind of imagination.
Max Abelson, he's the host of the Business Week. Catch it tonight, 10:30 p.m. Wall Street time on Bloomberg TV, the Business Week show.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Walt Disney Company has declared a dividend of 30 cents a share for the second half of its fiscal year, following through on a pledge to restore the payout, which was halted during the pandemic. Ford is lowering its profit guidance for this year due to rising labor costs after the United Auto Workers strike. The automaker says those costs will rise by $8.8 billion over the nearly 5-year contract. But Ford Chief Financial Officer John Lawler told Bloomberg Radio this morning he's hoping to limit the transfer of those costs to the consumer.
You have to think about pricing differently in our industry because all segments aren't the same. There's different pricing power across the segments. That's why we feel that what we did in segmenting the business and having the transparency around that is important. If you look at the commercial business in Pro, we believe there's still pent-up demand and pricing power there. However, in Blue, in the more of the retail consumer segment, you're going to see prices come down. We've been consistent talking about that. Back in 13.4% of disposable income to buy a vehicle. Went up to 15.7 in 2022. It's down to 14.5% roughly now. We see that coming back to 13.4% as you move through 2024.
And today, Ford shares did decline by 3.1%. Lawler, by the way, a guest on Bloomberg Surveillance. You can hear the full conversation on the Surveillance podcast. VinFast Auto shares higher again today, with the Vietnamese electric vehicle maker having its 7th straight day of gains. The stock today, VFS on the ticker, up 11.8%. Those are our top company stories at this hour. I'm Charlie Pellet. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
Jess Minton and Carol Masser here in the Bloomberg Interactive Brokers Studio. Let's get a check on the latest world and national news with Nancy Lyons in Washington, D.C.
Thanks, Jess. It is the 7th day of a temporary pause in the Israel-Hamas war. Negotiators from both sides reached agreement at the last minute to extend the truce another day. It's unclear if the extensions will continue, but we do know that Israeli Prime Minister Benjamin Netanyahu plans to resume attacking Hamas the minute the pause is over. And former Defense Secretary William Cohen tells Bloomberg Sound On the U.S. is trying to warn Israel about its tactics.
You have the President Biden and Anthony Blinken sending the signal behind the doors, so to speak, through emissaries, perhaps even our CIA chief, to say, be careful here, because you have an existential interest at risk here, but we have interests at risk in the greater region. We do not want to see this go further.
William Cohen says any escalation could put U.S. forces in harm's way. After a nearly 10-month blockade on military nominations, Alabama Senator Tommy Tuberville has indicated he does plan to move forward with pending nominations as soon as next week, though he didn't go into specifics. He did acknowledge it is time for the chamber to get it done.
We need to get them promoted. I don't know what they're going to do with the resolution, but we're going through all the people that are up for promotion. We will promote people in the very near future.
Senator Tuberville says his actions did stir up Democrats and caught their attention. Donald Trump and his attorneys are once again prohibited from making public statements about the courtroom staff in the former president's civil fraud trial. A New York appeals court reinstated a gag order that had been temporarily lifted 2 weeks ago. The gag order was originally issued in October after Trump lashed out at a judge's law clerk. The judge says he'll now vigorously enforce the gag order. Trump's attorney says it's a tragic day for the rule of law. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Carol and Jess.
All right, Nancy, thank you so much. Nancy Lyons with World and National News in our D.C. newsroom. Carol Masser, Jess Minton here on Bloomberg Business Week. Jess in for Tim, on this Thursday. Jess in for Minton. No. Jess in for Tim. Want to talk a little bit more about Cathie Wood?
Yes, I mean, look at this ETF, the ARK ETF month to date, up over 30%.
Yeah, it's best month ever. Our story, our headline says, despite waning fan base, this story by our Emily Graffeo. So it says, after trailing the NASDAQ 100 for prolonged bouts of time this year, the ARK Innovation, as you mentioned, Jess, gaining a record 31% in November. As investors are, it's the narrative we've been talking about, right? Investors are expecting, hoping that the U.S. Central Bank is going to start cutting interest rates next year. And so we're seeing investors feel more comfortable going into some of those riskier assets.
And this is one of those key things that, especially when you're thinking about speculative investing, when you see something like this, people clearly stepping back in, especially after 3 straight months of losses for the major indexes in coming into November. So now you're seeing people dipping their toes back into some of these speculative corners.
Yeah, the ETF, by the way, pulling in roughly $150 million in November. That pales, though, in comparison to the often $1 billion a month flows common to ARK Innovation in its pandemic heyday. Listen, this was an outperformer in a big way during the pandemic. Lots of stories written by Bloomberg, a cover story. And I'm looking at where that ARK Innovation Fund is year to date. It's up about 50%. Go back to its 5-year performance, on average up just about 2.5% annually. So putting it versus about a 12.5% gain for the S&P 500. So longer term, we know it's been a much more difficult slog, especially the last few years.
It has, and the size and scope, once again, when we're looking at this month. So ARK, it's biggest monthly outperformance ever against the NASDAQ 100 as